like US investors, like you guys are on steroids. Like when I sold my triplex in Toronto, I have to pay capital gains. Like 50% is taxable on your marginal tax rate. Shoot, that could be on $1 million, 50%, 500,000 on my, let's say 30, yeah, it's significant. Because baseboard heating, they pay for it. My tenants pay for it. I tried it to pay for it and hike up the rent. Windows are open, AC is on when it's dead of winter or when it's heat on, whatever. So you want to offload all of that to your tenants. So I pointed to Matt and Alvin, or Matt and Adam, excuse me, a building. So along that street, Skyline owned a building at the corner. They weren't selling. There's another building right behind it, what you guys didn't see. That's sold for $157 a unit. Oh. I bought these for $107. That's $50,000 more, and that was just recent. That was just 1 year or 6 months. So either it's, I think it's dumb money, okay? Because smart money won't. That cap rate is so small now. That's probably about a 3 cap or 2 cap. That's a Toronto price. So you got to take a look at this. Is Kitchener, Waterloo, Cambridge area. This is the Waterloo region. It's Cambridge, Ontario, Canada. The cap rate shouldn't be that low. It should be hovering around 4 to 5% with a good value add. But if he's buying at 2 or 3 cap, 2% or 3% capitalization rate, that's very, very expensive. So it's 157. So that actually pushes all the prices up for me if I want to buy more, right? For him, maybe he put down a shitload of money. Maybe he put down 35, 45% down. Now he's going to be cash flowing, right? So it's tough when people do that. So take a look at the building. Yeah. So get a quick view. This is a 2.5-story walk-up. Same thing. There was, when you drove by, we had some 4 stories, 4 maybe 5 stories. I don't really like that. 2.5 story is good. No swing stage. I can do scaffolding if I need to get work done. Very, very simple. No major issues. These are old railings. The other building looked like that as well, but more rusty. It was older and it was actually falling apart. So sometimes you do have to put that money in. All right. You want to find buildings that's one roof, one building, and everything is inside. This is 3, so this is 3 11-unit buildings. So 3 11 plexes. So that makes up 33 units. So the 32 plus 33 is 65. I put these boxes for delivery. Something.
So these were purchased as a package with the other?
Yeah. So this 33 and the 32 unit that we just saw, the Linwood, it was purchased all together. The 65 units was purchased in one transaction, and it's for $7 million. Okay. So these are terrazzo floors, nice and clean, very hard. We're still upgrading some of the hallways. So there's nothing really to look at in this building. There's no real units. So taking a look at this, this is the laundry facility. I just painted it. You can see Skyline still. These are signs. I should probably get a little sticker, and I should probably
just cover
that, right? But this was a Skyline building. Actually, a gentleman, he was a realtor in Guelph. He bought from Skyline. Skyline bought this first. They held it. When I was taking a look at the transactions, he bought it for, I believe, $3 million. All right, in 2009. He sold it to me for $7 million. Since 2009, I bought it in 2000 and this is 2 years ago, so 2016. All right. So from 2009 to 2016, he sold it to me. He made a good penny, right? The 7 years, he made $4 million. Not bad. And then he probably upgraded, or he doesn't want to get into this. Actually, Skyline was a property management company that he outsourced. So he actually didn't even collect rent, do anything. He just played Skyline, which is smart. If it comes to the point where you want to own, but you don't want to deal with the headache, hire a property manager for any kind of commercial. You're looking at a 3 to 5% on gross rent. That's for multifamily. It varies depending on the size or if you have a good relationship.
Do you pay extra for them to fill it?
That should be included. For a single family home, it could range from 8 to 12% on gross rent. So those are the quick little figures of what you should be paying for property management.
Any thoughts when a Skyline does sell? Is that usually an opportunity, or they usually sell it?
Yeah. So that's an opportunity. So
why do the big companies sell?
Again, sometimes they need money, right? Usually they're not selling. So a lot of these REITs, they're not selling. They want to hold because they need that yield. They have monthly, quarterly distributions that they have to be able to service, right? So they're looking for yield. They're always looking for buildings. So the question is that, why do they sell? Why do they sell something small? Sometimes they have to free up cash to buy other buildings, right? That's like I sold my 10 unit to get this, right? It's all it is to get to the point where it's easier to manage, your money is working better for you, and pretty much harder for you as well, right? So there is a time and a place for you to sell some of the properties, to take that. You obviously have to pay capital gains, as we're not US here. We do have, like, US investors, like, you guys aren't steroids, like real estate steroids. You have the 1031 exchange, take advantage of that. You guys are amazing. Like, if you guys have that, if we had it here, no capital gains. What this means is, I don't know the time period, but you're selling a property, no capital gains if you quickly buy another property. Whatever that time frame, you have that 1031 exchange, buy another property. And you can quickly snowball that really, really quickly. When I sold my tenplex, when I sold my triplex in Toronto, I have to pay capital gains. So what is it? It's like 50% is taxable on your marginal tax rate. So shoot, that could be on $1 million, 50%, 500,000 on my, let's say 30. Yeah, it's significant. So for those US players there, seriously, take advantage of that. We don't have it here, but we just have to, work a little harder. It's a little bit slower for us, but it's nonetheless, we can still do it here, right? So again, nothing special. Laundry facilities and 3 buildings. I'm not going to go through all 3 buildings. Washer and dryer here. Again, I buy it, $1,200, right? Nothing new here. Here's my boiler for 11 units. Look at the size of it. It's nothing. It's not huge. It's not a 200-unit building. Here's the boiler. Here's my booster pump. The exhaust goes to the expansion tank, that little gray thing at the back there. And this is a commercial hot water, domestic hot water tank, which seriously, it's about $3,000. This boiler system for 11 units, because I had my boiler break down on my Chapel Street, it's about 10 to about maybe pushing $13,000 per unit. It's a little bit more because obviously it services less units. The more you have, the economies of scale, you're paying $28,000 for a 32 unit. This is probably about $13,000 now for 11 units. It gets more. Obviously, the price per unit, like if it heats up more units, obviously the price per unit drops, right? So very, very simple. So just, that's the economy of the scale you want to guys get into. There's nothing wrong with holding 10 properties, single family homes, whatever, 10 roofs, 10 boiler systems, 10 hot water tanks, nothing wrong with that. If you're scaling it, if you're holding it for the 10 years, you can hold it for 25 years, right? Nothing wrong with that, then you can upgrade. I want to talk about paying it all off, okay? Because I thought about that one time. My rationale was, I was talking to my wife, we were walking the dog. This is way back in 2003-04 when we started. I said, you know what, this is amazing. I bought 896 Dundas Street East, is a triplex. I'm gonna buy a property every 5 years. That's what I said. Every 5 years I'm gonna buy a property. I'm gonna do that for the next 25 years. I'm gonna have 5 properties. Bang, bang, bang. And then I'm gonna pay it off, right? Now the problem here with this is that you're not leveraging. Always need to be leveraging, or you're just buying a dividend stock. So you put down 25% on a property. If capital appreciation goes up by 3%, 3 times 4 is 12%. Your appreciation, okay, on that is 12% right off the bat, just on appreciation, right? If you put down 20%, 20 times, so that means it's 5 times, right? So 5 times, whatever, 3 is gonna be 15%. Do you get the math there? If you don't get it, go learn it somewhere else. Then you get your cash flow. Obviously, your cash flow is going to be generating some money. So it's 12% plus maybe 2%. It's going to be tight. So that 2%, 3% is going to be tight. And then you get your debt pay down. So your debt pay down, let's say on my Elgin property, it's about 50 G's a year. I don't see it, but your mortgage is coming down. Okay? So all those 3 aspects is what you're earning on real estate. Can you do that on a stock? On the best, I think it's 10 cents on the dollar on a margin account. I'm not sure my figures anymore, but I think it's 10 cents on the dollar. Can you leverage that on a stock? But you can, on a stock play, right? I'm not sure what the leverage is on a margin account, but you can do that on real estate. So real estate is very, very powerful. It's a safer investment and you earn more because of the leverage. So that's why, are you gonna pay it off? Like, I can appreciate what Matt Pichet said, the fruitful investor. He goes, are you gonna pay it off? There's nothing wrong with that, okay? because you want to be free. You don't want those headaches. Sometimes I think that as well. I'm sitting in my bed, I'm like, gee, I want to be a Matt Piché, I want to be on the beach, I want to be whatever. It's like looking at my cameras and that's it, right? That's a good goal. I like that goal, right? But you're just not leveraging. I think, this is my rule of thumb, is like 50% leverage is very comfortable, okay? You can't go wrong. Somebody else is paying that debt for you, 50%, so that means the value of your building is whatever, 10 million, your mortgage is at 5 million, okay? You're just paying it off. You have a fixed rate of 5%, so your term is gonna be you have a 5-year term, it's gonna get renewed after 5 years. Then you extend it back out. Do you know what I'm saying? And then now you drop your payments again. Now you're cash flowing better and stronger, right? You don't have to pay it off. Or if you can refinance it, buy another property, right? But always stay a little bit leveraged. So I say my comfortable rate would be at 50%, all right? So that's another little tidbit, a nugget for you guys to think about.
Portfolio-wide or each property? Or?
It depends, right? Because obviously when you buy a property, you're gonna be at 25% down, 10% whatever, working capital and closing costs and things like that. So yeah, it's not gonna be 50%. If you can do that, great. You're gonna be cash flowing very, very, very nicely each and every month. But it's something that it's gonna be it's gonna be 10 years from now, 15 years from now. When I'm 53, when I'm 63, I'm probably gonna have a whole bunch of properties, maybe 50% leverage, right? Nothing too aggressive. Because when you're older, you don't wanna take that risk, right? You just want that cash flow. It's gonna be very, very stable, right? But when you're starting off, when you're 28, when I started when I was 28, I'm leveraged. I understand I'm leveraged quite a bit. Sometimes I have that cash flow. I'm gonna keep that aside in my bank account or whatever, a money market fund. You're gonna keep it there. When you need to pull it out, then you start pulling it out. Sometimes you wanna use that leverage carefully and strategically, right? So you are leveraged, but you have that money aside there for you if you need it, right? So that's a little tidbit on the financing part. The operations part is very, very simple. There's nothing really to talk about. This is it. This is the building. 2.5 story walk-ups. Same thing. Flat roof. You can see. Try to get the 32 units. Get it in one building, not the 33 units. Because what happens is that your utility cost is going to be a lot higher, right? So I now have 3 boilers. Gas is going to be higher. I have to heat walkways, staircases, things like that, times 3, right? I know it's smaller, but it's still more walkway, more common areas I have to pay to heat, to clean, to repaint, because now I'm painting again. So try to get one building all in one unit. If you can get a 50 unit building, 2.5 story walk-ups. In the States, there's a lot of those. We looked at Houston as well. So those are great areas to buy. If you can buy something like that in a B like I don't really like the Schedule D. I think they call it the Schedule D in low class. You could make a lot of money. Risk is higher. Your return should be higher. But I still like something in a B or C class neighborhoods that you can drive the rents up. It's a good value add. What I mean by value add is that you're driving up the rents. My Elgin is not a value add, but my expense is not 40% on gross. It's going to be 15%, right? My rent's already high. I can't raise it. My expense is at 15%, maybe max 20%, but it's not even 20% because I don't have any of the utilities. And those are the big expenses. So know what you're getting into, right? Know if you have all this stuff, the boilers and stuff like that. Because baseboard heating, they pay for it. My tenants pay for it. I tried it to pay for it and hike up the rent, right? So it's like $600 a bed or something, or $575 or $550 for a 3-bedroom unit. Windows are open. AC is on when it's dead of winter or when it's heat on, whatever. So you want to offload all of that to your tenants, right? So again, the theory, the knowledge behind all of this is very, very simple. Execution is hard. Execution is the main, is a key. Finding that money, finding the deals, putting the pieces in play. These pieces could be your managers, your cleaners, your contractors. Then you have to oversee a whole bunch of stuff, right? My wife does a whole bunch of the accounting parts, the legal stuff, putting the deals together, the GPLP structures, dealing with investors, because we have to deal with investors because some of it is not all of our money. This building, I own almost 50% of it, right? Because I sold my Chapel Street to get this, and obviously the Linwood properties, right? So I own almost 44% to be exact. But that's a key, right? When it comes to the point where you're looking for money and doing all of these different sort of structures in that business, you may need some help, right? So sometimes you may collaborate, right? And say, Matt's an accountant, Adam is good at doing the operations part, right? Sometimes you pull your money together, right? And you buy something bigger, and then you cash flow better. It's a lot stronger, right? It's always better to work in a team, because now you're actually buying a bigger boat, I say, okay? Because the tide raises all the boats equally, right? But now if I'm not fishing this small little dinky boat anymore. I'm in this big, nice, whatever, this cruise line. It will raise everybody together, but your boat will be a lot stronger. So these ones financially is a lot stronger than my 10plex, right? My 10plex, I sort of capped out on that, sort of capped out in regards to the rents. If I was gonna redo everything to that standard, a nice, really high standard, that I can command $1,000, $1,200 or whatever, and I would have to put in more renovations. But it's only 1,000 because those units were small. So getting into something like this, having my investors with me, and then myself, I can get obviously a bigger boat, bigger property, and now we cash flow. Everybody will cash flow a lot stronger. So it's always good to work in a team. It doesn't necessarily like work well. Like I actually don't even get my family involved. It's just tough. Like you'd rather work with business partners, investors, than with family, because sometimes you see family members, like, something didn't go right or whatever, and then you have to see them for Christmas or whatever, and like you have to explain everything. And you know, sometimes working with somebody else, strictly business, you know exactly what you're getting into, it's a lot better.
So before we wrap up this video with Kasey, I just want to give him a huge thank you. Honestly, it's meant so much, you taking the time and energy to spend with myself and Adam and let us shadow and videotape you for a couple days. If you guys are an investor like Kasey, if you're crushing it in your own market, in your own niche, I'd love to hear from you. In fact, we'd love to document your story. So feel free to reach out to me. You can reach out to me on Instagram. You can comment on this YouTube comment section just right down below. Or if you check out the video description, you'll find all sorts of different email addresses where you can reach out to me at. So if you guys are crushing in real estate, we'd love to document and share your story. Reach out to us so that we know what you're up to. Just let us know, you know, what your market is, what your strategy is, how long you've been doing it. Just give us a quick little bio. And anywhere in North America, we're down to travel. Heck, even if you guys are outside of North America, give us a good pitch and we'd love to come to your market and learn how you're crushing in real estate. Anyways, again, thank you so much to Kasey and everyone else that's ever shared their story. We have a ton of new landlords that I'm looking forward to sharing their story with you guys as well. We'll definitely have Kasey back. We'll definitely shoot more videos with Kasey. I'll try and twist his arm to start a YouTube channel, but no promises. At the end of the day, we need to remember a lot of these real estate investors are very busy and don't necessarily have the time or energy or see the immediate ROI that YouTube produces. But anyways, again, thank you to everyone that's been so supportive in the comment section. It means a lot to myself. It means a lot to Kasey, and I think it actually makes my little corner of the internet extra special. So if you guys haven't been hanging out in the comment section, jump down there, share your information, share your positivity, and let's all grow and learn and earn together, because I think that's the whole point. Anyways, until next time, remember, making money is a team sport. There's more than enough money in this world for us to all make it, but if you're not saving it, I mean, like, what's the point, guys? Thanks. Bye.